Yeah, I started with my own personal deposit. I put in money for my school lunch savings, some from here and there, and a bit from side jobs. When you get access to resources you've never handled in your life before, it's definitely a whole new set of opportunities and a reason to be impressed.
Do you have a set of rules that you realized you should never break if you want everything to go well?
Trading is not a scam. Trading is a fully legitimate profession, as long as you dedicate enough time to it and take it seriously. No one but you truly knows why.
It is truly remarkable to consider the vast array of capabilities this system possesses. This inherent capacity for excellence demonstrates a high level of proficiency, allowing for the successful completion of complex and demanding tasks. By utilizing every available resource, it consistently reaches its peak potential, proving exactly what it is capable of in any professional situation. This is someone you can listen to. But today in our studio, we have a pretty interesting situation in the sense that we're interviewing a trader who has reached the funding stage with a $5,000 account, has already withdrawn $404, and this isn't even his first payout. Plus, he's also worked with other pro trading firms. At the moment, he's only 20 years old. At the time of recording, I was really only aware of one thing. He thinks deeply for his age. And in this interview, I want to share with you exactly those thoughts that Albert will share with us. Because his approach, mindfulness, and the depth with which he works through different things are truly impressive. Let's turn to Albert and find out what exactly impressed me so much in the interview with this young man. Let's go. Hello, Albert. So tell me, what exactly brings you to our interview, my fine young man?
Hello, Igor. You invited me, so I decided to come.
You decided to come to share your experience in a virtual handshake with everyone. Is that right?
Absolutely right.
All right. So as I look at you, I see a young, promising, just an amazing person. Please tell us a little about yourself. What do you do besides trading? And how did you even get into trading?
Well, let's start with the fact that I'm 20 years old. I'm studying at a university in Moscow. Besides studying and trading, I have some side jobs and do sports. I don't really have any super extraordinary hobbies. Everything's pretty normal. I got into trading when I was 18. My father, who had experience with binary options, later decided to switch to classic trading and invited me to join him. That's basically how I ended up here.
So that's how you got into the classic market. But how did you end up in the crypto market?
I got into the crypto market after about half a year, maybe even more, of experience in the Forex market. Actually, it was also at my father's initiative that I expanded into other markets. Because cryptocurrency sometimes offers opportunities that no other market can provide, both in terms of volatility and in terms of other opportunities to make what's called a life change. So,
You came here to gamble, right? Come on, admit it honestly.
yes.
All right. That's always good to hear, especially since we're on the Upscale channel. And for those of you who are here for the first time, Upscale is a prop trading company. It gives you up to $800,000 to manage without risking your own funds. And yes, as Albert already mentioned, since he trades both Forex and crypto, on Upscale, you can actually trade both Forex and crypto. So if you still haven't tried it, the link is in our description. And now, Albert, what can I say to you? I can only tell you one thing. So you were wandering, just starting to learn, and then your father, the older generation, comes along and you start talking about crypto. For me, honestly, that's something unimaginable. Because usually when I see an older person, let's put it that way, or even anyone really. Now, if they're 20 or 30 years old, but for example, already 40, 50, 60, usually it's the other way around. So like a kid might have, say, farmed some hamster coins, then comes to his dad and says, I need 2,000 rubles transferred to my card, but I don't have a card. And that's how they get introduced to crypto. But for you, it was the opposite. It happened the other way around.
Yeah, I got into cryptocurrency before all the hate.
So overall, what are your impressions? How would you describe the crypto market for the year 2025?
It's scary, really scary. The year 2025 overall was probably the most unusual experience of my entire life, especially when it comes to trading. With Trump coming in, his tariffs, the helicopters, the invalidation of basically any trading strategy, and the mass liquidations of a huge number of people I was following. So honestly, this is the most unusual experience of my life.
And it was the same on Forex, not just in crypto.
That too.
All right, fine, fine. First of all, yeah, look, so you were trading both of both. As I understand it, you were trading with your own deposit, right?
Yeah, I started with my own deposit. I put in some money from my school lunch money, some from here and there, like from part-time jobs, and tried trading with my own funds.
If you don't mind me asking, how much was your deposit?
My very first deposit was $200.
And then, of course, prop trading came along, and your eyes just popped out of your head.
Of course, because when you get access to that kind of capital, money you've never even held in your hands before, it's definitely a whole new set of opportunities and a reason to be impressed.
So, how did that happen? Tell us about your prop trading journey.
I bought a prop account in May of 25. I did it after I decided to completely revamp my trading strategy. By trading strategy, I mean the methodology for opening and managing positions, in general, the entire trading system. After a successful backtest, I was backtesting for 3 or 4 months. It was important for me to do it on a live chart, not just on historical data. That's when I decided to buy my first prop account. I ended up blowing that account, but honestly, I didn't really beat myself up over it. And I didn't blame myself for it because I understood that everything was just getting started. A month later, I bought my second prop account at the same prop firm and successfully passed it. It was July, a pretty volatile month. Not only did I complete both phases, but I also made a profit on the funded capital itself and received a successful payout. That was my first such success.
How much was the payout back then?
The payout was 3.5% of $5,000. That was about 180 or 170 something bucks, which was nice. It's not a huge amount, but it's still money from trading. I decided not to drag it out, not to wait until I get to 10% there. And I took it on anti-FOMO lead.
Good strategy. So, after your first withdrawal, what did you feel and what did you decide to do next?
I felt really proud of myself and decided to go to a print shop to make my first certificate and hang it on the wall. It was really a huge reason to be proud because I realized this was a real result, real money, not just numbers on a screen, but actually on my card. And like I said before, my eyes just about popped out of my head. But then, after a couple days of euphoria, I kind of calmed down and just kept on trading.
Look, on that piece of paper I saw, I noticed the logo, not the one that's here between us. Right here? This logo. But that's not the logo that's there. There's a different one there. So somehow, fate brought you from there to us at Upscale. What was that journey like?
From a mental standpoint, that journey was tough because the prop firm where I got my first account and received my first payouts decided to stop working with Russians due to their policy. And after I received my last payout, they had to close my account. And this happened right after I got my account scaled up. And I didn't even have time to get the bigger payout from the scaled account like I wanted. Basically, they took my account away and I started wandering between other prop firms looking for conditions that would suit me so I could keep getting results. And little by little, that's how I ended up at Upscale.
So look, it turns out you already had experience trading at prop firms, so Upscale wasn't your first time. So what exactly made Upscale stand out to you compared to other prop trading companies?
it just so happened that I joined Upscale. My friends had recommended it to me many times, so I decided to read the rules. What caught my attention about the rules was that there are no restrictions on the ratio, no limits on margin in a trade, or on the percentage you can actually set in a stop loss. That's really important because everyone has different strategies. Take scalping, for example, where stop losses are in the tight. You need a pretty large position size there. And if you have a restriction like only 1% of your deposit in a stop, or say you can't use more than 50% margin, considering the leverage Upscale offers, even 50% of your deposit for scalping isn't that much, given the short stop losses. Rather, the lack of such restrictions. I really like that there are no such restrictions. Another thing that caught my attention at Upscale was the support team. I received my first payout. While withdrawing, I accidentally requested a withdrawal of just $1. Of course, it was a mistake. And getting just $1, then having to wait another 2 weeks to accumulate profitable days was pretty unpleasant. I contacted support, and the people there were very friendly and listened carefully. I explained the situation. They canceled my withdrawal, and I requested a new one for the full amount. They processed it calmly within a day. No problems at all. You'd think such a silly situation would be a hassle, but they still resolved it in favor of the trader. That really means a lot.
On behalf of Upscale, I can also say that yes, we truly value every trader we have. So if you ever have any problem, make a mistake, or have a question, you can always reach out to our technical support or, for example, join our community, which is available both on Discord and Telegram. As always, you know where to find all the links. And Albert is direct proof that we decided not just to pay out a single dollar, but to make the full payout. By the way, I still haven't heard from you. How much did you withdraw from Upscale back then?
Before the profit split, it was 10% of the deposit.
All right then, fair enough. Empirical data, please. What was the size of your deposit?
$5,000. That was my first account with Upscale.
So you got a payout before deductions of $500, and in the end, you probably received 420.
400.
400. Still not a week yet. Not great with math, huh? Listen, for many people, that's a significant result. Well, for some people, that's a month's salary. For others, it's 2 months. And for some, it's even a year's salary or more. Of course, it depends on the region in the process. While you were telling your trading story, I heard a phrase that I think I haven't come across in our interviews before. The phrase was that you did backtesting on a live chart. I know what that is. Could you explain a bit for the guys why you did that and what it actually is?
Basically, backtesting is working through situations within your trading strategy. Usually, it means using old data. So, you open a chart that has already played out in the past, let's say for the year 2024. And within this 2024 period, you look for trading setups and try to work them out. As I already said, and as Igor mentioned, I did this on a live chart because I have experience working with historical data, but it can slightly distort your perception of trading. Because as soon as you start making live trades where you're risking your own money, you might develop a fear of opening positions. That's exactly why, given my small but still existing experience, I decided to backtest on live data on a real chart in real time. And this paid off. I did this to test out the trading strategy I decided to adopt. I got it from someone and later adopted it to suit myself. And
So, how likely is it that we can take a look at Albert's adapted trading strategy?
yeah, no problem. All right, look, Igor. I'll show you using the example of the euro dollar. I used the same strategy for both Forex and crypto, so let's just pick any chart. I determine the narrative of where the asset could theoretically move. To do this, I need to know where the price is, what it's reacting to, and where it could be headed. First, I highlight the dealing range area for making a trade. Why do I do this? I do this to limit the range within which I want to find a position and work it out. In this case, I marked out a price range on the daily chart where I would like to find a trade. What do I do next? I need to find a key level from which the price could theoretically react. In this case, there's a premium zone, a discount zone, and the equilibrium of this range. If I want to continue the trend long, then I should look for positions at levels below 0.5, and accordingly for shorts above 0.5. Since I said I need to identify a key level, we have to find it. I can mark this low here, which the price tested but didn't take out. I formed a double bottom. The price showed a small reaction from it, but then continued moving downward. Accordingly, I consider this level no longer valid, and I need to look for another one. Area. In the discount zone, I see something like this. A rejection block. This is an element of price movement. I also trade imbalances and order blocks, and liquidity as well. After I identify a possible level from which the price might react, I need to zoom in to find some nested key levels, some liquidity that we can take out and get a reaction from. For this, we need to switch to a lower time frame, 4 hours. And in this case, I see exactly a nest of line, a POI, point of interest, meaning a spot where I can look for a price reaction. In this case, inside the daily rejection block, I have a 4-hour consolidation and a 4-hour imbalance. Right before this imbalance, I definitely have. There's also something else. Equal lows, meaning equal lows, which once taken out, the price would very likely react to, because this is quite a massive area with a lot of internal ranges. And here, I'll be looking for a price reaction. So as we can see, the price then came into this zone, took out these equal lows, and formed a reaction. Based on this reaction, in this case a 4-hour imbalance, I can see that buyers are dominating here. Right here, actually. After the price showed a reaction and consolidated, I can start looking for a direct entry into a position. To do that, I need to zoom in even further. Let's switch to the 1-hour chart. Here, I see that the price was consolidating, like this. Then, as part of a manipulation, the price broke out of this consolidation, moved above it, and consolidated within 4 candles. So I can see that buyers are holding this level and are ready to keep pushing the price further. Now, let's move directly to the M15 timeframe. Here, the price formed nested levels. Here's the first imbalance and here's the second imbalance. These are the confirmations I need to enter a position. So as soon as the price broke out of this imbalance after testing it, I entered the position right at market, set my stop behind the confirmation on the 4-hour chart, and aimed for the nearest fractals on the same 4-hour time frame. And in this case, I was aiming right here. Would have aimed, that is. Or you can hold the position for a higher target, depending on your risk-reward ratio and your plans for the day. So that's the kind of position I recently took. 3 risk to reward. That suits me more than enough. That's it. And that's pretty much how I analyze the chart and look for positions.
When I was listening to you, I didn't want to interrupt, but I definitely noticed that your explanation sounds like you're not a student at university right now, but actually teaching at the university. Just because you use all those terms, who was your instructor, or did you just train yourself like that?
His name is Alex. Honestly, I don't know his last name. On YouTube, he goes by the nickname AlexFX. He's a pretty big trader who works not only with his own and proprietary capital, but also manages investors' funds. And he created his own trading strategy, which he shared in full on YouTube. And at the beginning of 2025, when I was at a crossroads with unprofitable, unsystematic trading, I was looking for someone to follow, and one of my acquaintances recommended him. Because there was no need to invest money in my education, everything was streamed on YouTube. There are full videos on technique, on psychology, and there are podcasts too. That really won me over. With this person, I felt I could achieve something systematic because he expresses his thoughts in exactly the same way I tried to do. Clearly, precisely, everywhere it's obvious what is what and why. And for me, it was really important not just to understand what I was drawing on the chart, but what it actually gave me. So I decided to learn from him.
Listen, all I could suggest is that you pass on a message. Say hi to Alex. I more than believe that he's watching us right now. And if he isn't, we'll show this draw. Yeah. Just because he has this. How should I play? His students end up taking prop firms for some pretty impressive payouts. I mean, compared to the account you have, that's honestly impressive. Let's say, for example, we imagine you had an account, not $5,000, but say $100,000. If you made 10%, that's it. You could basically never work again.
Yeah, I agree with you on that.
Are there actually any differences compared to Forex? The euro dollar pair you showed us, which is also available on Upscale, I've already mentioned that. And with crypto, like for example, with Bitcoin, Ethereum, Doge, Fartcoin, Pumpcoin, all those unmentionable names.
Yeah, honestly, there are. Because in the Forex market, assets mostly move based on macroeconomic indicators on what's happening in the world, if we're talking about currencies or strategic assets like gold. It's about what's happening in countries and directly in their economies. Cryptocurrency is more susceptible to certain narratives and not necessarily political ones. Sometimes it's just a famous blogger, or say, Elon Musk says he's selling Bitcoin, and suddenly Bitcoin starts to skyrocket. The cryptocurrency market is more influenced by narratives than by macroeconomic data. News about wars and other antics by Trump prove this.
In general, the market doesn't. So the cryptocurrency market doesn't depend on macroeconomic data when it comes to going long. But if something crazy happens, then going short is the obvious move.
That's a must, right?
Absolutely, it's a must. And speaking of musts, do you have a set of rules, like rule number 0, rule number 1, that you've realized you should never break if you want things to go well? In
case you have losses, don't try to win it back. I made this rule for myself. I call it, in my own way, the one trade rule. It doesn't matter if the trade ends with a take profit or a stop loss. I stop trading for the day. Whether things go well or not, it doesn't matter. I might get stopped out, and that stop loss might not just be a technical one according to the strategy, but a really frustrating one. For example, you could get stopped out by just a millimeter, and then the price shoots off toward your take profit. That kind of thing is really unpleasant. If you hit your take profit, you'll feel euphoria. And either way, it's emotions, whether positive or negative, they can affect your trading and how you see the market. The market doesn't forgive that kind of thing. So it's important to keep a clear head, which is why I stick to the one trade rule. I've managed not to break it for a very long time now.
So basically, you only open one trade per day.
I try to, yeah. Sometimes I get stopped out at break even. In that case, I might open, say, one more trade, 2 at break even, but fine, maybe I'll open a third. But if things just aren't working out for a long time, well, I just step away from trading. I'll rethink things and come back either the next day or maybe even the next week.
I'm still amazed. You're only 20 years old. You know so many terms. You've already withdrawn from one prop firm, then another. Now you're sitting here with me for an interview. Where do you want to go next in terms of trading?
You know, there really is no ceiling. And I won't even talk about managing other people's money. But in any case, I'd like to use proprietary capital as a tool, first and foremost to scale my own personal capital, and then transition. If possible, fully transition to using only my own funds. Even though prop firms have their rules, they might be strict, they might be lenient, but they always have them. With personal capital, of course, there's more freedom, and when it comes to gaining experience in the market, that can really work in your favor. Honestly,
Look, it's simple. Even what I asked you at the beginning. You started at 18 with $200. And then from your first prop firm, you already withdrew $180 for yourself. You didn't just withdraw your deposit from the exchange or somewhere else. You actually withdrew your profit, and the rest of the account, you still had it left. And as I understand it, as I got it, you didn't stop there. You had more payouts. Then you also got payouts from Upscale. If you look at, how should I put it, the cash deposit to make $200 from $200 on top of that, I'll put it this way. It's problematic if we want to follow all the risk management rules. How long would you need to do it if we told you that you have to trade strictly by all the rules that exist? So how much time will it take you?
honestly, I won't promise anything, but to be frank, I would need at least a year. Because a trader who can make more than 70% with their own capital is truly an outstanding trader. Even a 40 to 50% increase in capital over a year is considered very, very significant. If I somehow managed to make 100% of the deposit in a year, that would be a dream come true. And,
How long would it take you with prop trading?
well, let's put it this way. Here, you really have to start from the initial size of the capital. Because making 3% from 100,000 and 30% from 10,000 is technically the same, but the effort required is massively different. For example, if my own capital is $200 and I need to make that same $200, with prop trading, I could trade, I don't know, for a week, and if everything goes well, after passing 2 phases, I could earn back my deposit. But if my deposit is $10,000 or $100,000, well, then I'd probably have to pay up, even with proprietary capital. So,
So, from the example you gave, for instance, A $10,000 account is pretty accessible. On Upscale, accounts are available from $5,000 to $200,000, so $10,000 is an option. It's the second tier. And it turns out that by just buying the second account and adding it to your profile, your journey is shortened from 52 weeks to just one. So you reach your results 52 times faster with prop trading.
Yes, that's right.
At the same time, you're not increasing your risks.
No,
Sounds like a fairy tale.
I agree. Proprietary capital, if you have certain skills and self discipline, really offers huge opportunities.
For young people, it's a must have. And
For everyone, really. I'd say, especially for them.
is it possible for an individual to dive directly into the world of prop trading without any previous professional experience? I
Wouldn't recommend it because prop trading is, in any case, restrictive. There are always some rules you have to follow. And if you don't have any trading experience, even on a demo account, you don't understand your own psychological type, or how you'll handle long drawdowns or a series of stop losses you might get. You don't know how you'll act depending on the market node. Do you even act based on your mood, or are you, let's say, so systematic that you can completely set emotions aside? I wouldn't recommend jumping into prop capital. Immediately putting your own money on the line is pretty much a losing game. In any case, I think you should just watch the charts and your trading strategy for a while. This includes your methodology for opening positions and risk management. In other words, understanding how much you're willing to lose, under what conditions you're willing to take a loss, and how you'll act if your drawdown reaches a certain percentage of your capital, so to speak. Why you got into this, looking for mistakes over time, and only then trying yourself in. Real trading, it doesn't matter which kind, whether it's proprietary capital or your own account. First, you need to build at least some kind of system. You don't have to invent it from scratch. That is, you can find someone who shares their data publicly, in training or otherwise, and use their trading system. Try to understand it. If you understand it, that's already very good. Later, with time, experience, and trades, you'll adapt it to suit yourself. And then you can calmly start trading with real money. I think that's the most sensible approach.
sounds like advice for those who are just looking to start. I absolutely agree with you. This approach definitely has a right to exist. As I understand it, you yourself either followed this approach or eventually realized that's how you should act. And for those who, after watching this interview, suddenly want to try out what prop trading capital is, but don't have any experience, like Albert mentioned on the Upscale, I can honestly say that we have demo accounts available. So you can fully experience real conditions. The only difference is that the profit is simulated on a demo account. You can see how everything works, and it's very close to the funded part of the account. All the rules are there and everything, so you can really get a feel for prop trading as it actually is. And then you can decide what to do next with your money. And at this moment, at this very moment, what I want to say is, Albert, I want you to give us a little peek behind the curtain of your soul. Maybe even rip your shirt open right here. And show us what's hidden in your Upscale personal account.
Here's my certificate showing that I became a fantasy trader and received $5,000 to manage capital. And actually, the second certificate is for my payout 8% of the capital after profit sharing, which I received from Upscale.
So why am I seeing this in a virtual format and not on paper?
Well, it is partly because I specifically made sure to record the moment I received my very first payout and secured my first funded account, treating them both as a permanent digital trophy to commemorate my success. Well, as I said, it was quite a big source of pride for me, so to speak. My first trophy head, like a deer above the fireplace. After that, I started to take it a bit more calmly, but the joy is still there.
I hope that in the near future, I'll see it in your interface. Not just a certificate for 5,000, but also a certificate for 200,000, for 100,000. And so that the payouts there are also about 10% of the account.
I'll do my best. I promise.
All right. I see this success story. I see this certificate. Let's take another look at it. For example, let's look at the one for 5,000. For 5,000, there you go. To achieve it, you need to go through, I understand you had a 2-phase challenge.
Yes,
You need to pass the first phase and the second phase. So, how long did it take you to complete these phases? And did you have any difficulties?
I probably can't say exactly by days, but I completed the first phase in about a week, and the second phase took me around 2 or 2.5 weeks. It took a bit longer time wise, but in both phases, I had some pretty successful trades. I consider myself lucky. That's a pretty quick completion, especially for intraday trading, where you don't always get positions every day. And that's just how it turned out. So, in total, it took me about 3 weeks. I completed both phases.
How long was the payout?
It also took about 2 weeks to get the payout. At first, I showed pretty good progress, but then I lost a bit. I lost some and got back to about the same level I started with, and decided not to drag out the payout for too long. So I basically withdrew 10% before the split.
Sounds like a plan that's already been carried out, judging by the certificates. But did you have any days when you were close to blowing your account? Why did that happen? And what did you realize about yourself in those moments?
Yeah, I did have days when I was close to losing it all. That happened both on Upscale and with other prop firms too. The first few times, I didn't exactly stick to my plan, because having a strategy and all that sounds great in theory. But a strategy, as you probably know, isn't developed in a single day. And in the very beginning, it's not always possible to follow it perfectly. As much as you'd like to, I think there's no need to be afraid of that. It's all part of the experience. You absolutely have to go through it. Even top traders blow their accounts sometimes. Not to mention that within, even if you lose, say, 5% of your personal capital, it's not exactly a huge tragedy. The rules of proprietary capital set their own standards. Sorry for the tautology. And you have to follow them.
I can sense the journey you've been through. Exactly, yeah, just like you said, that it's a path, it's experience. I can tell you have that experience. And besides that, I want to add a little to reveal one of your secrets that you haven't shared with us yet. The one that's about upscale. Your account got closed. Is that right?
Yes, that's correct.
Could you please elaborate in detail on exactly what that specific mistake was and what strategic course of action you decided to take to ensure that it absolutely will not recur in the future?
Overall, at first, I followed the system. I traded with a fixed risk, 1% of the deposit, until I hit a 5% drawdown. Then, still within my own system, I switched to a lower risk to reduce the chance of blowing the account and tried to recover. Well, I didn't manage to recover, unfortunately, but for me, that's not a big deal. What was the problem? After getting the payout, first of all, I felt like I was a super trader. I got a rush of euphoria. I didn't go overboard, but I still started breaking my own rules. When entering positions, I started setting tighter stop losses, longer take profits, sometimes holding on too long, sometimes entering trades without enough justification. And in my system, there's a rule that if the chart doesn't show me enough reasons to enter, I wait for them. If I don't wait, I skip the entry. Unfortunately, I started deviating from this rule and ended up with a pretty significant drawdown. After reducing my risks, I managed to climb back from -6 to -3. But after that, I couldn't hold on to that result, unfortunately. I went back to risking it then, 1%, and lost some more again. And when I was down 8% of my capital, I decided to enter a trade with the remaining 2, hoping that by increasing the risk, I could at least somehow recover the loss. Because for me, an 8% drawdown is really significant. At that point, I honestly just had no idea how to get out of that drawdown. The destabilization of my mental state was pretty severe. The price moved against me, and basically, my account got closed. Again, I went through that situation and reflected on it. I drew my conclusions, tweaked my risk management strategy a bit, and just accepted it. Because honestly, aside from acceptance, there's not much else a trader can do. You can get upset with the world, you can get upset with the market, start constantly increasing your risks, but unfortunately, that won't lead to anything good.
I completely agree with everything you said. And as you were sharing that monologue, I had a question. What personally motivates you to keep going? Because, as you said, in trading, according to some research you read, after 6 months, only 1/10 of traders remain. As we know, you've been trading for 2 years now. So basically, that's zero point 0.1 times zero point 0.1 times zero point 0.1. The probability that you'll stick around is 1 in 1,000. What is that? What is that 1 in 1,000 that keeps you moving forward?
Honestly, looking at other people's results is both bad and good in some ways. It's bad in the sense that when you're not making money, but everyone else is except you, it can really mess with you mentally. It's good in the sense that you see trading isn't a scam. Trading is actually a real profession, as long as you dedicate enough time to it and take it seriously. I understand that everything is achieved through systematic work. Even just one of my payouts proved that. Even though things like this happen, like blowing up your account, big drawdowns, and so on, you can still become a successful trader. The main thing is to work, work, and work some more. Just like anywhere else, if you want to achieve success.
If you had to put it in 2 sentences, what advice would you give to the future of the trading industry? To those guys watching us now who will one day be withdrawing hundreds of thousands of dollars a day? First 100, then 1,000, and then hundreds of thousands.
Try it, don't be afraid. The market isn't some scary crocodile, even if it does bite sometimes. Don't try to find the holy grail. There's no such thing as a perfect trading system. No system is without losses or brings huge profits every week. You won't get your first payout on the very first day, as soon as you reach funding. No, it's always going to be a journey, one way or another. No one promises it'll be easy, but keep trying. Don't stop. If you're ready, I'd probably draw an analogy with real life businesses. Here, the system of delayed gratification applies. In a regular job, to earn big money, sometimes you have to work your way up to a good position, and that's why many people leave to start their own business. However, business is the kind of activity that doesn't bear fruit on the very first day. If you believe in yourself, you can very well achieve what you want. And here, using business as an example, is the effect of delayed gratification. For a while, you'll be working at a loss. Then you'll break even. Then things will start to pick up. And eventually, you'll be able to rest on your laurels. And with trading, it can be exactly the same.
I'd like to suggest we wrap up our interview and highlight that it's always. It is truly a profound joy and a privilege to see such a young person who possesses such a remarkable capacity to think so deeply and reflectively. And I would also like to take this moment to sincerely wish every one of our viewers that your own personal approach to life remains very similar to this. It doesn't have to be exactly the same. Each of us is unique and accordingly original as well.
Thank you to all the viewers for watching this interview. It was a real pleasure. Thank you so very much for inviting me here today to share my personal thoughts and my professional experience with you. I truly and sincerely hope that this information will be able to help many people who are currently looking for some extra support or meaningful guidance out there on the vast internet, to help them become the best version of themselves.
Follow the link in the description and give us a like. It'll make Albert happy. Ask your questions. If he's in the mood, maybe he'll even answer you. See you all soon. I'll see you at the top. So, what did you spend your first payout on?
I spent it on gifts for my family. It just so happened that it came during a period of birthdays, not just one actually. So I bought some gifts with that payout. And I treated myself too, because it's important to feel the rewards of your work, if you have them. I set aside about 10% of the payout and went to a restaurant. Had some meat, fish, and a glass of wine. So I gave gifts, ate some fish too. And then I got back to the charts.
Oh, wow. Oh, wow. All right. All right. So, a happy trader is a well fed trader.
Yeah, that's right.
All right, then. I will bring things to a close. Right here.